Did you know the Australian government can now freeze your bank account without warning? That's right. Over 700 new laws and regulations have been passed in the last decade, and many of them quietly, behind closed doors, all in the name of national security and financial stability. But here's the twist. Your money, your savings, your crypto, even your cash may no longer be fully yours. In fact, cash is slowly being phased out. Digital surveillance is tightening, and ordinary Aussies are being watched more closely than ever before. Is this protection or control? Are we stepping into a safer financial system or a soft surveillance state disguised in economic language? Stay with me, because in this video, I'll reveal 10 shocking ways these new Australian laws are targeting your money. Some will surprise you. Others may leave you questioning your entire financial setup. Let's dive in. Explosion. Number 1. Digital currency push. In recent years, the Australian government has been accelerating its move toward a central bank digital currency, CBDC, a form of money that's fully digital, fully trackable, and fully controlled. On the surface, it sounds convenient. No more paper cash, faster transactions, fewer fees. But here's the dark side. When money becomes purely digital and centrally managed, every transaction you make can be monitored, recorded, and even denied. This isn't some conspiracy theory. It's already being tested by the Reserve Bank of Australia under the name EAUD. Quiet trials are being run across banks and institutions, and most people don't even know it's happening. Now, imagine a world where you can't pay your tradie in cash, where every coffee you buy, every gift you give, or donation you make is automatically logged in a government-accessible ledger. The idea of financial freedom? It slowly disappears. If your account ever gets flagged, whether by mistake or for a minor infraction, you could be locked out of your money instantly. No court, no phone call, no delay. Just a frozen screen when you try to pay for groceries. Think it can't happen? It's already happening in countries like China. So, why should this concern you? Because once physical cash disappears, you lose control. Your spending habits become data points, your lifestyle becomes a profile, and privacy, something we used to take for granted, becomes a luxury. This isn't fear-mongering. It's a real shift happening quietly, and the sooner you understand it, the better prepared you'll be. Digital money might be the future, but who controls that future is what matters most. Number 2. Cash restrictions and bans. In 2020, the Australian government attempted to introduce a law that would make cash transactions over $10,000 illegal. The bill was eventually scrapped after public backlash, but the message was loud and clear. Cash is under attack. While that particular law didn't pass, it exposed a deeper intention, one that's still quietly moving forward behind policy doors. More retailers are going cashless. ATMs are disappearing across suburbs, and some banks have already introduced daily withdrawal limits. Slowly but surely, your ability to access and use physical cash is being squeezed. But here's the real issue. When cash is gone, so is your ability to transact anonymously. Want to lend money to a friend, pay for a used item, or tip someone for good service? You'll be forced to go digital. That means everything, every single payment, is trackable. There's no room for off-grid generosity, emergency trades, or simple privacy. You might think, I have nothing to hide, but that's not the point. Privacy isn't about hiding, it's about having a choice. The more we rely solely on digital systems, the more control financial institutions and governments have. They can freeze, flag, or question your transactions without warning. And if laws tighten further in the future, even holding large amounts of cash could become suspicious. What was once normal, keeping savings in your drawer or paying your gardener in notes, may one day be seen as criminal. It's not just about money. It's about freedom, autonomy, and whether you can still operate outside a controlled system. Number 3. Frozen accounts under emergency laws. Imagine waking up one morning, trying to pay for groceries, and your card is declined. You check your bank app, your account is frozen. No warning, no explanation, just a digital lock on your own money. This scenario isn't fiction. Thanks to expanding emergency powers in Australia, it's a very real possibility. Under certain national security or emergency declarations, the government now has the legal authority to freeze individual bank accounts, not just of criminals or suspects, but even those simply caught in the wrong place at the wrong time. We saw hints of this during the Canadian trucker protests, where peaceful demonstrators and even those who simply donated money found their financial access restricted. Australia has similar frameworks in place, laws that can be activated in moments of crisis. And the definition of a crisis? That's up to the authorities. Whether it's a protest, a financial panic, or a cyber threat, your funds could be locked as a precaution. What makes this more chilling is how easy it is to justify. It's for national security. It's to prevent misuse. But once that switch is flipped, you don't get a say. Your access to rent, food, healthcare, gone with a keystroke. In a world moving toward full digital finance, this level of control should raise alarms. Because if your money can be frozen without due process, do you really own it, or are you just borrowing it from the system? Number 4. Surveillance of large transactions. Most Australians don't realise that every transaction over $10,000 is automatically reported to AUSTRAC, the government agency tasked with tracking money laundering and terrorism financing. That's not new, but what is new is how the net is tightening. It's no longer just about big, obvious transfers. Frequent small transactions, irregular spending patterns, or transfers between personal accounts can now trigger red flags. Welcome to the era of algorithmic financial surveillance. Today, your bank is no longer just a service provider, it's a data watchdog. AI systems silently monitor for anything deemed suspicious, even if it's completely legal. You moved $2,000 3 times last month. You might get a call. Sent money to a friend overseas? Your transaction could be logged. There doesn't have to be a crime, just unusual activity. The scariest part. You won't know you're being watched until you're flagged. And what happens then? You may be asked to explain yourself. Your funds could be held. Or, in extreme cases, your account temporarily frozen. It's all done under the banner of safety, of course. But when every move you make is tracked, privacy becomes a myth. For many Australians, these changes are invisible until they aren't. Until they hit a limit, or get that strange email from their bank, or have a transaction reversed without explanation. The question is simple. Is the surveillance actually protecting you or controlling you? Because when ordinary people are treated like suspects, we're no longer free. We're monitored. Number 5. Crackdown on crypto. For years, cryptocurrency was seen as a digital escape, a way to store and move value outside the grip of governments and traditional banks. But that freedom is now under fire. In Australia, regulatory bodies are moving swiftly to tighten their control over crypto assets, exchanges, and even wallets. They say it's about stopping fraud and protecting investors, but what's really happening is a slow, calculated attempt to regulate crypto out of independence. Major crypto exchanges are now being forced to register with the government, comply with strict KYC rules, and report suspicious transactions just like banks. That means every time you buy, sell, or transfer crypto, you're being watched. And it doesn't stop there. Authorities are already pushing for new rules that could allow freezing of digital wallets, restrictions on peer-to-peer transfers, and even taxes on unrealized gains. Yes, you could be taxed on money you haven't even withdrawn. And while this may seem distant or technical, it affects anyone who believes in financial freedom and ownership. Crypto was supposed to give power back to the individual. But now, with centralized exchanges cooperating with regulators, your assets are no longer as free or private as you think. If they're in the system, they're visible. And if they're visible, they can be restricted. If you're in crypto, Don't wait until your access is limited or your funds are frozen. The window for decentralized freedom is narrowing fast, and many won't realize until it's already closed. Number 6. ATO's real-time tracking. Once upon a time, dealing with the Australian Tax Office meant waiting for letters, forms, and once-a-year assessments. Not anymore. The ATO has entered the digital age with full force, and it's watching in real time. Today, thanks to sweeping data sharing agreements, the ATO is connected to your bank, your super fund, your employer, and even your crypto exchanges. That means they don't just know what you earned. They know what you spent, saved, and traded, often before you do. Let's say you buy a new car, book an overseas trip, or invest in crypto. The ATO already knows. They can cross-check your spending habits against your declared income in seconds. If something doesn't add up, you could be flagged for an audit automatically. No human needed. The system is designed to find anomalies, and in some cases, even small inconsistencies can trigger serious scrutiny. This level of oversight might seem efficient, but it also raises serious concerns. When every detail of your financial life is monitored without your consent or knowledge, the line between regulation and intrusion becomes dangerously thin. It's no longer about catching tax cheats. It's about total transparency, from you to the state. And once the system suspects you, you may find yourself trying to prove your innocence to a machine. The takeaway? Tax transparency isn't optional anymore. It's automatic. So make sure your financial habits match your records, because the ATO isn't coming. It's already here. Number 7. Limited withdrawal rights. It's your money. You earned it, saved it, and deposited it. But what if I told you that you may not be allowed to withdraw it when you want, or how much you want? That's the growing reality in Australia. More and more banks are quietly limiting daily cash withdrawals, capping ATM access, and even asking for justification when customers request large sums. It's no longer about convenience, it's about control. People are reporting situations where withdrawing more than $5,000 means delays, paperwork, or even outright denial. Some branches don't carry enough cash on site anymore. You're told to order your own money days in advance. And in certain cases, customers are asked, "What do you need it for?" A question that should never be necessary when it's your own funds. Slowly, cash is being treated like a suspicious request rather than a basic right. The worst part? Most Australians aren't even aware this is happening until it's too late. Until they need quick access to cash during an emergency and suddenly find themselves trapped in a system with invisible walls. The infrastructure is being built to make physical money obsolete, and once it's gone, there's no going back. So if you've always thought, "I can just go to the bank if I ever need it," think again. The rules are changing, and the system isn't designed with your freedom in mind. Start preparing now, because in a crisis, the ability to access your own cash could be the one freedom you'll wish you'd never taken for granted. Number 8. Penalties for cash deals. Paying with cash used to be normal. It was fast, private, and widely accepted. But now, in many parts of Australia, using cash is slowly being painted as suspicious, and in some cases, even punishable. Government policies are making it clear. They don't just prefer digital, they want to eliminate cash altogether. And if you continue to use it for certain transactions, you could be hit with serious fines or penalties. There have already been proposed laws that would make it illegal to pay or receive more than $10,000 in cash for goods or services, even between private individuals. While public resistance delayed those changes, the idea hasn't gone away. Authorities argue it's about cracking down on black market activity and tax evasion. But here's the problem. Innocent people are being caught in the net. A tradie doing home repairs, a family selling a car privately, or someone helping a relative in need, all potentially at risk if they go over the limit. This creates a chilling effect. People start second-guessing everyday, honest transactions. Businesses feel pressured to stop accepting cash altogether, fearing audits or legal trouble. And slowly, a society built on choice becomes one built on surveillance and compliance. The more these rules expand, the less room you have to transact freely and privately. So ask yourself, when the government can fine you for using legal tender in legal ways, is it really about safety or is it about power? Because once cash is penalized, true financial freedom becomes a fading memory. Number 9. Expanded definitions of suspicious activity. Once upon a time, suspicious activity meant something obvious: money laundering, fraud, terrorism financing. But today, that definition is expanding. In Australia, what qualifies as suspicious is increasingly broad, vague, and alarmingly subjective. A large cash deposit, a donation to a controversial cause, even moving your own money between personal accounts too frequently. All of it can trigger automatic flags without any criminal intent. What's even more concerning is that banks are now expected to act not just as financial institutions, but as watchdogs for government agencies. They're required to report transactions that seem unusual, but no clear explanation is given for what unusual actually means. That means your normal behavior could be flagged simply because it doesn't fit a pattern, or because it matches a trend being monitored by artificial intelligence. And once flagged, you're in a system, your activity tracked, logged, and possibly investigated. This kind of scrutiny creates fear and uncertainty. People stop asking questions. They avoid supporting causes. They even limit their own financial movements, not because they've done anything wrong, but because they don't want to be noticed. It's a form of silent pressure that nudges everyone into compliance. The truth is, in a system where suspicious is never clearly defined, everyone becomes a potential target. When everyday choices, like moving your savings or giving to charity, are quietly monitored and judged, it's no longer about crime prevention. It's about shaping behavior through invisible rules. And that should concern every Australian who values freedom. Number 10. Corporate and government data sharing. When you tap your card at the store, sign up for a rewards program, or check your balance online, you probably don't think twice. But behind every click, every swipe, every transaction is a growing network of data collection, and most of it doesn't stay private. In Australia, banks, corporations, and government agencies are now sharing more data than ever before. And most people have no idea just how far it goes. Your loyalty cards? They track what you buy. Your bank? It logs how often, where, and with whom. Insurance companies, telecom providers, credit agencies, they all gather and store details about your life. And under current laws, much of this information can be shared with government departments without your knowledge or consent. The line between private company and public authority is becoming dangerously blurred. What's worse is that this data isn't just sitting on a file. It's being analyzed. Algorithms are being trained to predict your behavior, flag your habits, and even assess your risk profile. Imagine being denied a loan, flagged for an audit, or put on a government watch list, not because of what you did, but because your data profile suggested you might someday. That's not financial planning. That's social control. We used to worry about privacy on social media, but this is bigger. This is your entire financial life being turned into a product, traded between entities you'll never meet. The future of money isn't just digital. It's transparent, tracked, and quietly judged. And that's the final warning. The more data you give, the less freedom you keep. So, what does all of this mean? It means we're not just witnessing a financial shift. We're living through a silent revolution in how money is controlled, accessed, and monitored in Australia. From digital currencies and frozen accounts to expanding surveillance and disappearing cash, the freedom we once took for granted is being replaced by systems of control hidden behind screens and policies. These laws weren't shouted from rooftops. They came quietly, tucked into reforms, hidden in fine print, wrapped in words like security and efficiency. But now you know, and awareness is power. You still have time to prepare, to diversify, to protect your assets, to ask hard questions. Because in the end, the issue isn't just about dollars and cents, it's about freedom, privacy, and the right to manage your life without permission from a digital gatekeeper. If this video opened your eyes, give it a like, hit subscribe, and share it with someone who needs to hear this. Drop a comment below. How do you feel about these changes? Are we safer or more controlled? Stay alert, stay informed, and above all, stay free.